Hello, welcome to the European Open briefing for Tuesday, May the 9th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. So after yesterday's election excitement from France's presidential election, where the market's favorite Macron was the winner, it's rather quiet this morning. The euro is continuing to drift downwards as traders continue to unwind the Macron-led rally for the euro. The dollar, though, is edging higher. It's currently trading near 2-month highs, but the Australian dollar is one of the worst performers this morning. It's down at a 4-month low. We had some data out of Australia which showed a surprise drop in retail sales, so that hurt the Aussie. The pound, though, is not doing too badly. It's steady against the dollar, and it's continuing to set new multi-month highs against the yen. And in commodities, we had news yesterday that OPEC may extend the current output till beyond 2017 into 2018. So this did lift prices a little bit, although the fact that we still have huge oversupply concerns that continues to weigh on the market. But let's begin with the dollar-yen pair. We can see the dollar has been climbing up this week. It hit a fresh 2-month high earlier today of 113.63. This is partly to do with the overall weakening demand for safe havens such as the yen. The Swiss franc is also down, and also gold as well. After the French election, we saw a big improvement in risk sentiment. Gold is near 2-month highs, so that's one of the factors. But also we've got rising expectations of a rate hike in June by the Fed. The Fed funds futures currently pointing to an 81% probability that the Fed will raise rates next month. And also in focus this week are inflation and retail sales data out of the US for April. Those will be released on Friday. Moving on to the euro now, we can see that despite that surge at the open of trading on Monday, which took the euro above 1.10 level against the dollar, it has been drifting downwards. It's currently trading just above the 1.09 level. That's mainly down to the buy the rumor, sell the fact factor. As traders continue to unwind the rally that actually began prior to the second round. It actually started at the end of the first round a couple of weeks ago. So much of those the gains had already been priced in since Macron was the favorite to win. But the focus now will be shifting to the European Central Bank. We had an ECB board member, Yves Mersch, who said that the ECB is getting nearer to declaring that the risks to the Eurozone growth are balanced, and that the central bank may soon begin discussing policy normalization. So this puts the focus on Mario Draghi, who's due to give a speech in the Dutch Parliament tomorrow. So it'll be interesting to see whether he mentions anything about changing the ECB's tone to a more neutral one, given the ECB, of course, despite the fact that we've had recent pickup in growth and inflation, has maintained its busing bias so far. But let's have a look at the Australian dollar now, because it's one of the worst performers this morning. It's down around 0.6% against the US dollar. Retail sales data out of Australia for March was disappointing. They fell by 0.1%, missing expectations of 0.3% increase. We also had a downward revision to minus 0.2% in February. So all of that does not bode well for first quarter growth. Plus, iron ore prices continue to drop, and that's also weighing heavily on the Aussie, which has dropped below the 0.74 level, and it's currently trading at 0.7340. The Kiwi is also down due to overall weakness in commodity prices, but we're unlikely to see the Kiwi falling too much because we have the RBNZ meeting on Thursday, where they will probably sound a bit more upbeat about inflation, given that CPI has risen back to within the RBNZ's target band. So that should provide some support for the Kiwi for the time being. The pound is also not doing too badly against the dollar. It's been hovering around 1.2940. It came very close to rising above 1.30 on Monday. We have a Bank of England meeting on Thursday, and this will be an important one because the bank will publish its quarterly inflation report, where they will give projections for inflation, interest rates, and GDP growth as well. But the underlying support for the pound is coming from the fact that the Prime Minister Theresa May continues to do well in opinion polls ahead of the June general election. The Conservatives will likely get a big majority if those polls hold until election day, and this is reflected in the pound-yen pair, which hit a 5-month high of just above 147 earlier today. And in commodities, oil, we can see that after recovering from that big dip last week, it headed higher last Friday, but it's been holding fairly steady since then. We had reports yesterday that OPEC and Russia may extend the deal to into 2018. They may extend it to more than 6 months, possibly to 9 months. But those the benefit from the lift from that has been rather limited. It only rose rather modestly yesterday, although it's and then before falling back, although it's back up again early today. The main reason why oil isn't going up further is because the US output continues to rise, mainly from higher shale oil production, and also there's signs that demand from China is slowing as well, so that those are putting downwards pressure on oil prices. So the focus now will be that meeting on May the 25th, where OPEC and non-OPEC countries such as Russia will meet to discuss whether or not they want to extend the current output deal. A quick look at today's economic calendar before we go. We can see we had some German data out this morning. Industrial output fell by less than expected in March, and exports rose by more than expected, so that didn't have too much of an impact on the euro. We've got Canadian building permits coming out in the US session, as well as the JOLTS job openings out of the US. But apart from that, it's going to be a rather quiet day. That's it from me. Thank you very much for watching and have a great day.